Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 27th of May here in 2021. And, well, it depends on where you look at. On the Nasdaq, we're massively unchanged, flat on the session. On the S&P, which is what we're looking at here, we were up about 0.5%. Now, the Dow had some strength. That's up about 0.8% on the session, but the strength came in the Russell, which is our RTY, or the IWM. So that's the broader picture here. Crude was up 1%. That's oil. Gold was flat, and the bond market was lower in today's session. There were some key stocks that were making new highs, some of them new 52-week highs that we'll take a look at. But the big winners in the S&P 100 today were General Electric. That was up about 7%. Ford right behind it. Boeing, those are two stocks that are up. General Electric and Ford up 7% today. Boeing up 4%. That was a big driver for the Dow. And Honeywell, General Motors, and the like. What we'll do right now, I have a couple things to talk about. We're updating our box. Now, what we're looking at here is called the volume profile, or the range, highs and lows, of an hourly chart. And this is just taking a distribution like a little profile, like a standard distribution or a bell curve. Takes all the prices, adds the volume, and puts them into this distribution. And the yellow is one standard deviation. And that's what the indicator looks like. It's a default tool. The volume profile, there's nothing special about it. It's just the default in terms of editing. It's just volume profile plugged into an hourly chart without overnight sessions on. Now, what I want to highlight is this concept of, again, sort of what we hang our hat on as short-term traders, which is called mean reversion. Mean reversion means reversion of the mean. So when they find the market above profiles or Bollinger Bands or Keltner channels or just some type of percent function, the odds do favor a pull or fall to the downside. Whenever you find the market under the fair valuation or the profile in this case, that's going to favor a long or a bounce. That does not favor one side to the other. It favors mean reversion, where the mean is roughly the middle. So that's the logic on the profile. We're not looking for it to go here to here or here to here, not top to bottom or that sort of full move, but just back to the middle. So anyway, as we look at these, the S&P is into the top of the profile. Again, the logic here is box, volatility box, rectangle, etc. The Nasdaq is right behind it, and that is a tight range. As you've been noting, the weekly expected move for the Nasdaq and the value area extreme, and meaning the box, is roughly at about the same spot. So that weekly expected move I have a little bit different, but it's 13,000 at about 680 for the Nasdaq, and that's where we find ourselves going into the end of the week. Top of the profile is about 13.7 for the Nasdaq futures, and of course QQQ would play into that as well. That means the next swing in the market has a higher probability of being down. Probability, not certainty, because the same logic took place here, and we'll call this, in my language, the alternate thesis. And if that happens, it can lead to a rapid breakout. But again, the odds are higher for the market to trade down. That's short term only. We're not trying to call tops in the market, just playing very, very short term into the next week. But the caveat is it is a holiday week. Memorial Day is Monday. Friday will be most likely, despite all the probabilities and the odds, this is kind of common when this happens, we'll be looking for upside bullish drift. And that is just holiday low volume bullish drift in the short term. Beyond Friday and into Tuesday into next week, the bigger picture most likely kicks into the market, leading to the downside. And the one little caveat, and that's where we're going to pick up, is the Russell index, which on the bigger picture, we'll take a look at those, is in a wider and longer volatility box. So I know we're looking at the profile and it's above, but it is into this volatility box. And again, logic favors a down move when we find ourselves above or into that top of the profile and just kind of tilted on its side. And probability favors a move to the upside whenever we find ourselves at the lower bound of the profile. And that logic would hold for weekly expected moves as well. What I want to do is pull our perspective to that same profile on the hourly chart, but now we're going to step one chart higher, one frame higher to the daily chart. We still have a what we call prevailing or dominant bigger picture uptrend. That's objective because the highs are typically higher than the prior high, so higher highs of price and higher lows. That can also create a trend line channel that makes buying pullbacks, we call those flags or retracements, a little better strategy short term than short selling looking for a top. It is completely fine to play those rubber band snapback pullbacks. I do that as well, but there are short term. That's what the key for these videos are. It's not predicting 3 to 6 months in the future. It's looking at what's happening right now, opportunities for you to take at this exact moment. So while we probably do see another drift to the highs, new all-time highs, again, the bullish holiday tape will take place the next few sessions, and we'll have a shortened week next week. But the broader probabilities, this is where there's always difficulty playing for that pullback or snapback. Sometimes it can come later than we want or expect it to. So that's the play within the S&P. Again, theme is continuing in the box. The Nasdaq also has a little bit wider box. That is in part, mainly, because of leading tech names that are in their own volatility box, or rectangle, or just trend lines. For Amazon shares, that's about 3,400 and about 3,100 for Amazon. Apple is no different. So for Apple shares, we're looking at it to be in its own volatility box. Not quite as clear, I think, as the others, but nonetheless, that is more sideways trend, and we see it here at the bottom of the range. I guess that's more the midpoint, closer to the lows than the Nasdaq itself. The Dow shows relative strength. Very difficult to see it in a box because it is more uptrending. And that is shy at this point of the 35,000 level. Now the Russell is where we are interested. It is the market or the index that is most consolidated, most sideways line. And that's the box you can draw from these profile levels. That means this short sold territory takes place around 2,300. And the long buy opportunities take place into about 2150. Obviously, no guarantees anywhere, but those give logic for fade trades in both directions. There is no trend, and when there is not a trend, when price is going sideways, we don't look at anything. We don't look at moving averages. We look at just the highs and the lows. One other quick moment or quick thing to highlight in terms of volatility boxes or rectangles is that crude oil, seen here with CL, did make a new, not all-time high, but a new 52-week high. And the last time we saw crude, at least the futures contract, trade or close at this level above 66.50, almost 67, we're going to have to go back to a weekly chart to see that that last happened in about mid-2019. And we're back to that level. Gold, we could talk inflation or inflationary trade or different little strategies, is in a short-term uptrend after a deep pullback from 2,100. 1,700 was the key support level, and that has led for gold prices and GLD to trade up to currently 1,900. The bond market has been downtrend. That is TLT and ZB, which we can see here. But those could be holding support levels, and those would be into about 130 on the index. Just keeping all this in mind on the big picture as we go into a holiday tape once again. Now again, these stocks are strong. Just a quick note before we close the video. We like to look at, or at least I like to look at, stocks making new 52-week highs. And just for time's sake, I sort them each day on watch lists through market cap. And I only concern myself with about the first 10 or so names. They would include Facebook, Coca-Cola. Actually, we'll go through some of those charts. We'll do it on the daily chart. What's the plan here? For pullbacks, retracements, flags, under the thought process, that which is strong tends more than not at least, not guaranteed at all, but at least tends to get stronger. So flag or pullback or retracement trades tend to be a little better strategies, but not buying new highs. In fact, shorting them as fades would be a little more strategic or profitable in the short term. Facebook is the largest market cap stock, making a new 52-week high, followed up by Coca-Cola. PepsiCo, that makes sense, although it's holding resistance. That's a little hit, but is coming down. That's one you have to squint. We don't really want to squint to see that's a new high. So we move on. We look at other financial companies. We look at Raytheon, which jumped up with a gap. Target, retail store, retail name, very, very strong trend. And FedEx, which continues its strong uptrend. Others would include Capital One Financial. Again, look for the pullbacks, look for the flags, look for those retracement type of opportunities in these trending stocks. In a drifting tape and a holiday tape coming up. And as always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May 27th, 2021.